Welcome to The Finance Files, a podcast hosted by best friends Whitney Coford, Brittany Carter, with occasional appearances from Whitney's dad, Greg Coford, and other guests.
We talk about all things finance, including investing, trading, economics, capital markets, and business management. Come learn the investor mindset with us.
Disclaimer, this podcast is purely for entertainment purposes and should not be taken as financial advice. Please do your research and be smart when making any investment decisions.
Welcome to another week on The Finance Files. I'm Whit.
I'm Britt.
And we're here with my dad, Greg Coford. So one of the things we've been debating when getting this podcast up and running is what is Market Mondays? And I think we all have a little bit different idea of what it should be. I want to throw it out all together because to me, it's to be honest, I don't really pay attention to the markets day to day. But Dad, you brought up some good points about why it's important for investors, even passive investors, to think long term and pay attention to current events. So why don't you expand on that a little bit?
Well, current events, things that are happening right now, can have long-term implications for a portfolio. For example, the upcoming presidential election will have an impact on what goes on in markets for a couple of years.
Can you give an even more specific example and maybe a historical one of where something in a presidential election affected the markets longer term?
Well, if the president and the two parts of Congress end up all being with the same party, then that party can pass a lot of legislation. And depending on what the campaign promises were, what the objectives are of the party that has that control, they can do a lot. And depending on, if they're wanting to spend a lot of money, they're going to be able to get those laws through Congress and be able to spend a lot of money. If the House and the Senate are a different party, or at least one of them's a different party than whoever the president is, then there's a little bit of a constraint because you've got to get it through both parts of Congress, and then the president has to sign it. So it just depends on what's going on. Right now in the political environment, both candidates are promising to spend basically like drunken sailors.
So if they're both promising to spend like drunken sailors, how would an increase in government spending how does that affect my portfolio?
So a wild increase in government spending shoves more money out into the economy, which is going to push inflation up. And if you have stocks that can respond to an inflationary environment, then you're going to be okay. If you have a diversified portfolio so that you have assets in there that are going to respond well to inflation, then you're going to be okay. But if your portfolio is all in savings accounts, you're going to take a pretty big hit in your spending power in that kind of environment.
Yeah, I remember the last election, I had just started with Sorby. So I was, again, like extremely new to investing and learning about capital markets. And what was interesting was neither candidate talked about cannabis at all. And yet as soon as Biden got elected, and then, come January and beginning of February when, he was transitioning in, cannabis stocks, especially Canadian listed cannabis stocks, they just took off. And there was a huge bump, and then, it went back down pretty quickly. And I remember asking you, like, why did this happen? Because neither candidate was talking about cannabis, anything related to decriminalizing or, changing federal law or banking or anything like that. And yet it was just the speculation, right? The potential that because it was a Democrat coming in, that they may be more friendly towards that. So I can see what you mean about even if the candidates aren't talking about a particular issue, if people perceive that they might do something, right, that can really affect both short-term and long-term portfolio changes.
Sure.
Well, that's interesting because I've heard Kamala actually is pro legalizing it, and Trump had during his presidency he like I guess he's now saying he'll be actually more restrictive on state level governance, though he said he would leave it at the state level initially. So I guess it'll be interesting to see how
Which,
the cannabis stock responds.
right. Well, and that's interesting that Harris is pro legalization or rescheduling because I think she made a big chunk of her career out of putting away individuals who were
Yeah,
participating in
yeah,
cannabis. So a total 180. But
yeah. Well, that's politics for you. So.
very true. Very true.
Yeah,
All
so I
right.
guess it's a matter of just dissecting what the different candidates are planning to do and how that might impact any, if you are specializing in a specific sector, looking at that. But yeah, I agree. It seems like both policies have like the potential to really further inflation. That'll also be kind of impacted by whatever the Fed decides, but I think overall, I didn't really think about inflation when I started investing, like, when I was younger. And I think now I think about it more than ever. And it's what can you do to hedge against that in your portfolio?
Well, and remember, the Fed is reactionary. In other words, the Fed responds to data that it perceives it's giving a read on the economy and where inflation is at, and then it responds accordingly. And so, what it won't do is look into the future and say, oh, this specific aspect of this specific candidate's platform is going to be wildly inflationary, but it won't kick in until the fall. So but we want to be ready for it. They don't do that kind of stuff because that's fairly speculative. They're more data driven on what's happening today and how we need to respond to that and what the direction of the economy is currently heading.
Yeah. How long
So,
historically has that lag time occurred from, excessive government spending to the Fed taking action?
well, again, it comes down to the data and how fast that spending impacts the inflationary numbers. So, for example, I know at one juncture, and I haven't looked in detail, so this may have changed, but I know at one juncture, Trump was talking about doing a tariff on everything we import from everywhere. Well, given that a significant chunk of what we consume is imported, that would be very inflationary. And that would happen as soon as he, got those things in place. And whether he's going to do it through Congress or a presidential edict and argue that it's a valid edict, we don't know. But that could be fairly quick inflation that could happen, shortly after the election if he were to win.
Why do you think the Fed takes a reactionary stance instead of thinking longer term? Is that just because there's so many variables that it would be impossible to do like scenario planning for different situations?
Well, yes, exactly. Like the example I just gave. A, Trump would have to be elected. B, he's got to decide that he's really going to do what he said. And last time he was elected, virtually none of his campaign promises he did. Um, if
Still
he
waiting
actually
on the
does,
wall?
yeah, yeah. And when does he do it, and how much does he do it? So it's really hard to say, oh yeah, this will be wildly inflationary on this date, because so much of it is nebulous. And given the source of it, you're not even sure he's going to, pay attention to it that day.
Well, I guess a follow-up question to that is, do you think as an investor, given how many scenarios there are and how speculative it is, what level of preemptive strategy planning should you be like making prior, like, you know what I mean? Like, should you also be somewhat like the Fed and like somewhat reactionary to anticipating certain events, or what's your take on that?
Well, so the last thing I saw said that, based on the current platform, that uh, Kamala Harris's spending plan was going to cause a $3.5 trillion deficit. Trump's was going to cause a $7.5 trillion deficit. Either one of those is a pretty big deficit. And that means that's money that's being shoved into the economy one way or another. And so I think as an investor, you kind of have to be reasonably defensive, because regardless of who wins, if they're able to execute on their promise, then you're going to see, inflation rear its head again. Now, having said that, if Congress is not the same party after the election, then you have that check and balance in place. In other words, the crazy stuff will be really hard to get through. So, and that's, so you don't want to be super aggressive today, but once the election is determined and settled, which I know some, if they lose, are going to argue that it's not settled, but we'll set that aside. But you got to look at not just the president, but what does Congress look like, and what's Congress willing to go along with on the presidential plan.
Well, and I think that really underscores the importance of researching each candidate individually, because it's obviously much easier to just vote, oh, I'm going to vote all Republican or all Democrat, or just single party, but the true check and balance comes in if we have a mix and a variety, and shall I say a diversification in parties, right?
Right.
So, and I think the other thing I was thinking while you were talking about the Fed being reactionary, I think the investor mindset, kind of what you were alluding to and what Brittany's question alluded to, you need both as an investor. You need to look at current events and be somewhat reactionary and rebalance the portfolio, but you do have to think longer term, and you do have to make a speculation or a thesis about what you think will happen, right? Because that may change how you diversify.
Right. And that diversification needs to be not only, amongst, like if you're going to look at the stock market, not only amongst a certain number of companies, it needs to be amongst a certain number of industries. So, for example, like you brought up the example of cannabis when Biden was elected. Yeah, cannabis took off right after that. And if you had 20 cannabis companies, you're feeling really good about life.
But only
if you held on to them too long, then not only did you give up your gains, but you lost a bunch.
Right.
And that's really concentration. That's not diversification.
Right. Okay. All right. Well, I think we've made a good case for keeping Market Mondays, or occasionally maybe mixing in a miscellaneous Monday. So join us tomorrow for Topic Tuesday, where we really dive deeper into this week's theme of diversification.